Morning everybody, it's Chris here from Serene Education. The 4 majors analysis update for the 12th of April 2011. Just going to go and look at the euro against US dollar on our CTC strategy 6 screen template, starting with the daily. I'm just going to zoom out and then apply my support and resistance lines. Okay, those are the major ones. Uptrend, very much bullish. Euro gaining strength. Notice that on Friday we had a nice up candle, a lot of momentum on Friday, followed by 2 days of indecision or pullbacks, starting with Monday, very indecisive candle, and the Asian market session has seen price revert further to the downside. Port of call should try and stay above at least 14,3500 to see further extensions. You'll notice as this uptrend has progressed, purely in the last couple of weeks or so, we've seen momentum really shift now, and we've had little intermediate trend line swinging higher. So if there's definitely a pullback, then 14,3500 would definitely be the area of choice, primarily because we've had a previous resistance level at this level, and this could become now the new support. I just want to zoom out a bit. That's when I have a feel. You can see that way back in 2009, in fact, we've had some consolidation around this area, around the 14,3500 mark. But ideally, you can see that if price can, I think price tested, just came short of 4,500 mark, the 1450 mark. So if the pair can stay above 14,3500, then we could definitely see further extensions to the upside. It's also important, apologies, just to mention that as long as 14,3500 is in, well, momentum's in this favor, then obviously the CTC is still governing further extensions to the upside. Notice how the moving averages are evenly spaced, confirming a very bullish trend, in fact. So everything on a long term is looking very, very good. Intraday, let's have a look. You can see that we've had a bit of a consolidation. There's 2 days of consolidation are now showing lower swings, and the CTC on an hourly chart has gone red across the board. So I mentioned 14,3500 would be your support area, so I'll note that in. There we go. You can see that the 50 period moving average and the 20 period are acting as a support, and if you just take those swings to the upside, it's just been breached recently. Moving averages have crossed over now, so if this pulls back and fails to break higher than the previous swing or support area, in this case, I can just draw a line, there we go, I'll extend it. You can see there's definitely a resistance and support, breakout, could there be a pullback and a continuation down to at least 14,3500. If we to see further extension to the upside, it needs to stay above this 14,3500 long term, so we could see a bounce on previous resistance and a push further to the upside. Smaller time frame, the 30 minutes. You can see the 50 period moving average now moving in, roughly around the 14,3700 mark. Also just going to put in the 14,3500. That's the long term support and resistance. Price needs to still be trading above that, going into the latter part of this evening or into the latter part of this week to confirm potential balance and further upside movement, or the previous resistance levels being reattempted later this week. If not, we could see a break of that 14,3500, and we could see possibly price putting way back at least to 14,2600 to start with, and then further down to at least 14,2100 and 14,1500. Over to sterling daily, similar to its partner, the euro. The euro. Apologies. Also see 2 days of consecutive pullbacks, a lot of wicks, and this coming around the 1400 mark again. Failure to break it. You've seen we've had an attempt earlier this year, and 2 attempts on Friday, one again on Monday, but failure to break higher than 16,400. We've seen the price pull back, and now what we're seeing is the pair testing, or on the Asian market, seeing a pullback taking place. CTC is still in our favor. 1600 mark is the long-term support and resistance line. You can see the number of bounces we've had, or tests on this, in as many months, and it's trading above all the moving averages, guys, on a daily. So still bullish, but ideally we need to be trading above 16400 now. It's been quite a while, and it still hasn't been able to break that all important higher high, and primarily because of that, we could very well see another reattempt of 1600. We've seen it in the past, so why not? So ideally we want to be seeing price action occurring or trading higher along this area here going into the latter part of this week. Otherwise what we could see is price just pulling back again, and potentially 1600 being our next target. Intraday, on our smaller time frames of 30 minutes, 15 and 5, CTC is definitely, well, hourly even to a degree is also negative, so pullback in effect as we speak. You can see on a 30 minute, for example, the latter part of this morning on the Asian session, prices, we've had a lot of wicks, and you can see prices now found some sort of support around a 16,2900 mark, and that happens to be previous support in the past. So should we use that? We will use that as our measuring stick today, and as long as price can stay above 16,2900, then we possibly could see a reattempt of the highs. However, you can see we've had a lot of wicks at 16,2600. Failure to find support at this area here at 16,2900 or the 1626 could see price ultimately fall further. You see there's a massive gap between where it's trading now and on a 30 minute to where it was prior, around the 1611 mark, 1100. So if it fails to find support in this area, then we could see price fall even further. And you'll notice that the swing highs, you can see we're in that area now where it's testing a prior swing to the downside. That projection where it fell, it pulled back, it was around the 61.8% fib area. From there to there to there to there, the 61.8. So failure to find support at 61.8 fib, could see 100 being tested, and ultimately 161.8 down the bottom. Same goes for the smaller. You can see the definite consolidation taking place. You can just put a box around it, wait for the break of the box to the upside or to the downside for further clear indication of further downside movement. Moving swiftly on to the US dollar Swiss franc on the daily time frame. Prices reverted to the downside after failing to break above the price swing. You notice here at 0.92500, prices failed to break higher, traded higher but didn't close higher, and because of that we saw price revert to the downside. And now ideally our next target would be the 0.900 mark to start with, or just below that. The last 2 days have seen very indecisive counters forming, especially this morning on the Asian market. We've seen very indecisive prices trading on the high end of it, leaving us with a very long wick to the downside, but we're still moving lower gradually, trading below all the moving averages, and our CTC is governing red on either side. So we should be looking for nothing more than further opportunities to the downside intraday. You'll see in our 2 and our 4 hour, for example, that momentum. Notice the swing lows still in our favor. Price action happening in the middle of the candle on the 4 hour, the last candle. Very indecisive. And our next target ultimately would be down here. Oops, apologies, wrong one. There we go. Just below that. So anywhere between the 0.898 mark on a 4 hour. You can see the CTC is also in our favor, trading below all the moving averages, and we're pointing for further downside movements. Smaller time frames, momentum pointing back. You can see that the price is trading the previous swing on a 30 minute. So a major pullback during the Asian session after price fell around about 4:30 GMT this morning. It's still trading below all the moving averages, guys, so it ideally needs to be trading above. This is the trend on a 30-minute chart for this pair. CTC is red in our favor, still trading below the trend line, major trend. It needs to be trading at least above the previous swing to the downside, in this case at least above 0.9075, or if you really wanted to, 0.908. Very important. Otherwise, we're still trading a negative trend. So anywhere above that. And once it's done that, now you'll find that this momentum to the upside now has created a trading wick where you're seeing more price action at the top end of it, and a nice long juicy wick, which would be classified as a clear hammer, hammering out a bottom. So price movement is just the indication of price change. We see more buyers instead of sellers coming into the market would confirm that, and we could hopefully see price break above the 50-period moving average. By doing so, trading above the trend line, and then we could see prior resistance support levels to the upside being tested. We've got a clear one here at 0.90950 mark. We've got another one at where the 200-period moving average is trading as we speak at 0.914, 0.9135. Last pair of the day is the US dollar against Japanese yen. Look at a daily time frame. You'll notice the pair is trading above the 200-period moving average, which means long term, great. A lot of momentum, trading above the institutional trading level. Seen a significant pullback in the past couple of days, back to the point where it's tested the prior side of the 200 period at the 83.50 mark. Got to stay above that level. Has to remain above the 83.50 mark to be classified as bullish. This just being primarily a pullback. If you look at where the actual move started, that 50 period or 50% pullback is just below the 83.50 mark, and the 38.2 is also just on the other end of it. So has to stay above the 50 period moving average to see further extensions to the upside. CTC is in our favor on a daily. It's now trading well above a consolidation range, and we should see further extensions to the upside after that pullback. So the next couple of days, if you can see price finding support at this 83.50 mark, or i.e. the 200 period moving average, then we could see a revert to the upside for this pair in the next couple of weeks. Intraday, you can see the pullback. Hourly chart, lower swings from a high is our all-time high, and you can see the swing lows. So dictating price action to the downside, swing low, and breaking lower. There was a prior resistance, support and resistance level, resistance, breakout. Now we've seen a break lower as we're seeing trading range now. It's testing a prior support and resistance level at around the 83.90 mark. Long wick. You'll notice the last 3 hours we've seen a long wick. Price needs to stay above this level. Ideally the 83.50 mark I mentioned, just put that in. Long term, that is your long term support. So that's got to go in. So price has to stay above that level. As long as it's trading above that level, then we're looking for further extensions to the upside. Failure to find support at that level there and break through, then we know that we're seeing a further pullback consolidation than what's really required, and by doing so it'll be trading below the 200 period moving average on a daily, which confirms that momentum is negative and we should see it revert to the downside. So as long as it's trading above 83.50, look for further extensions to the upside, primarily because this is just a pullback in that long-term time frame. So what price needs to do now is to find support. You can see that the wick, even though we're in a downtrend, there's more momentum to the upside, primarily because buyers are clearly buying now at this end here. There's less selling taking place. So as long as this can stay around this area and we can see price trading higher again than this prior break below the 200 period moving averages, and at 84.40, then we could see price pushing back to at least 85.50, testing prior highs. That's it for today, guys. Hope you have a fantastic trading day. Keep it simple. Take your pips when they present themselves. Make sure you follow all the rules when you're trading. Make sure your money management's in place, that it fits your criteria. Don't trade with a strategy which just does not balance the figures or your books come end of day. And most importantly, enjoy your trading and trade serenely.